What if the next big market move isn't about tech stocks or AI, but a geopolitical chess game in the Persian Gulf? Picture this: traders are staring at their screens, watching S&P 500 futures dip slightly, while oil prices creep higher. Why? Because the world's most critical shipping lane, Strait of Hormuz, is still a powder keg. And the US and Iran? They are dancing on a tightrope, with the global economy hanging by a thread. Personally, I think this isn't just about oil anymore. It's about how fragile our interconnected systems are. One misstep, and the ripple effects could be catastrophic. What makes this really interesting is how markets are reacting to whispers of a deal that might never happen. Traders are like gamblers at a roulette table, betting on whether diplomacy or brinkmanship will win out. And let's be honest, nobody knows the answer. From my perspective, the fact that S&P futures are down 0.2% despite a record week for the index shows how quickly confidence can evaporate. It's not just about the strait. It's about trust. When governments play games with global trade routes, investors lose sleep. What many people don't realize is that this isn't a one-off event. It's part of a larger pattern where geopolitical risks are becoming the new normal. The Trump administration's semi-negotiating stance with Iran? That's not just diplomatic jargon. It's a signal to the market that the US is prioritizing pressure over peace. And that's a dangerous game. If you take a step back and think about it, this isn't just about oil prices hitting $79. It's about how much economic pain countries are willing to endure for leverage. The Fed's rate hike calculus is already shifting because of this. A detail I find fascinating is how the July jobs report, which showed a contraction, briefly gave investors hope. But now, with Hormuz tensions resurfacing, that hope feels like a mirage. What this really suggests is that markets are living in a world where economic data and geopolitical fireworks are locked in a constant tug-of-war. And the loser? Everyone's portfolios. Deeper insight? The real story here isn't the numbers, it's the psychology. Investors are trying to balance the thrill of a potential deal with the dread of another crisis. It's like watching a car crash in slow motion, hoping the brakes will hold. The upcoming inflation data and earnings reports? They are just background noise compared to the drama unfolding in the Gulf. But don't be fooled. Those reports will matter. They'll tell us if the economy can handle more chaos, or if we're already past the breaking point. Closing thought, the next few weeks could define the year for markets. Will diplomacy win? Or will brinkmanship reign? And more importantly, what does that mean for your retirement savings, your job, or your ability to buy a house? The answer isn't in a spreadsheet. It's in the hands of leaders who think in terms of power, not progress. What do you think? Are we headed for a deal, or another oil price shock? Let me know in the comments, because this story's far from over.